this very first impact-linked finance market report is public since about 2 weeks, and I hope you have a chance to read it. For those that haven't had a chance yet, don't worry. I'll highlight some of the key findings today with you in this webinar. Nevertheless, when I was preparing for this webinar, I couldn't help but ask myself, well, what else can I add value to the numbers and results that actually you could have read on your own? How can I help you to engage with the data and get more out of the numbers so then it would help you with your journey with applying impact-linked finance? And so what I realized is that when I was looking at these information and a lot of insights, it's really also a good moment to take it as a chance to step back, look around, appreciate what all of these practitioners have achieved so far, and at the same time reflect on what that actually means for us or for your work. Um, for me, I would like to encourage all of us to go beyond the numbers. Of course, numbers are important, but to really go beyond just the figures and think about how these insights can be applied to your own journey and what steps you can take to align with or even to contribute to the momentum in this space. Without further ado, it's never a bad idea to kick off with some big numbers, right? This slide highlights the key numbers that define the current market landscape of impact-linked finance. As you can see, it highlights the overall market size at $35 billion, which is estimated based on a publication from the World Economic Forum earlier this year. In this specific market survey report, we managed to cover 18.3 billion of those deals. Specifically in 2024 alone, we have witnessed over $900 million being mobilized with the use of impact-linked finance. In terms of number of deals, we cover 3,710 total deals across the ILF landscape, across the years that this has been practiced for those respondents. And just in 2024 alone, we actually have close to half of the total number of deals with ILF. And this, for us, indicate quite an upward trend in terms of the uptake of impact-linked finance. So during how we did this survey was that it was an online survey where we have both multiple choice and open-ended questions. And in total, we received 26 responses. If you're interested to know more about the methodologies and the details, please go check out the report where we also put these into details. But for today, I think we can dive straight into the insights and the data. If you look at this figure, it's certainly very exciting because it seems like, wow, it's super big and it's so exciting to see how much assets has been mobilized with impact-linked finance. At the same time, numbers, how much is being allocated under impact-linked finance, it should be just a starting point and not the end points. Especially when it comes to the attempt to realize the true potential of ILF, I think it's actually a good question and to rethink, as in to shift the focus about, well, how much asset is being mobilized to actually how are these financing linking to impact and how can they be structured to better link finance with the impact on the ground? And these are the questions that I'm also going to walk you through as we move along the content of this survey. So now having a good snapshot of where the market is at the moment, I'm sure you'll be quite curious who stands behind these deals and these big numbers. And as you can see, among the respondents of the survey, a majority actually self-identified as impact investors, with 42% of the respondents falling into this category. Then we have 21% that identify themselves as intermediaries, followed by philanthropy at 17%. We also have the advised NGOs, public donor, and advisor in the data set, which is quite diverse. Now looking on the graph on the right-hand side, in terms of experience, 78% of the respondents actually started practicing impact-linked finance since before 2023. And so this data set is very likely that is reflecting a limited visibility into the emerging actors. But if you're one of these emerging actors, please do reach out after this webinar. We would definitely want to include your voice and experience in our next market survey. And now we move on to, let's look at the preferences for the different types of financial instruments with impact-linked finance. I think this graph provides quite some valuable insights into the tools and mechanisms that are currently shaping the landscape of the ILF market. As you can see, there is quite a clear preference for debt-based structures, including, for example, impact-linked or impact index debt, which accounts for 39% of the responses. Usually they're loans with interest rates that are tied to impact performance. And this particular preference for the use of debt instrument could be because it's relatively straightforward in terms of what financial terms can be tied to impact. But I'm also curious to hear from your perspective if you see it differently and to expand our thinking why debt is so popular. And coming second is cash incentives, including the very first impact-linked financing instruments that Roots has implemented, which is Social Impact Incentive SINC, as we always call it. These make up to 25% of the responses. And then third is management incentives, which was a slightly surprising response to us that they rank third at approximately 17% of the respondents have experience using management incentives, including impact-linked compensation. Because we did not explicitly ask for this particular instrument in the survey. And so for us, it was quite interesting. And how this practice is reflecting how impact-linked finance is being applied in different manners. What I mean is that it's not only in terms of the types of instruments that it is demonstrating how impact-linked finance is being used, but also in terms of at which level is impact-linked finance being used within organizations. Just to illustrate a little bit more on what I meant by that, let's say in a fund structure, impact-linked compensation can be used within the fund as a management tool to incentivize fund managers, helping to create alignment between the performance and the impact objectives. At the same time, outside, like the fund, it can be applied to investees with a different instrument, impact-linked financing instruments to improve impact performance. And so I find it quite interesting because it really demonstrates the versatility of impact-linked finance in driving alignment and also accountability across the investment ecosystem and not only on a specific type of actors. And here, under other approaches, on the right-hand side, you also see the breakdown of what other types of approaches have been named, including, for example, Impact Ready Matching Fund, which is a hybrid form of technical assistance with impact payment that are tied to milestone-based achievement. There's also impact-linked profit or revenue sharing type of instruments and impact-linked carried interest. And altogether, this other category account for 11% of responses. These options, while currently being very niche, they represent or they show us, well, actually impact-linked finance can be quite creative and tailored depending on what use case you would like to use it for. And while they are currently quite niche, I think it really gives us some aspiration or create some sort of imagination how impact-linked finance can be adapted for future use cases. And finally, we see that there is also impact-linked equity that has been practiced, including convertible structures. At the moment, this is the least cited approach at 8%, and it's quite obvious that they are not as popular as to debt structure. And they're at a quite early stage of adoption across the market. but we are quite curious if we see a different momentum or traction in the upcoming month or years as the also RF ecosystem matures. So there's a lot of numbers that I have just went through, and maybe it's also time to do a little bit of interaction. And so I prepared a poll because for me, what I saw from this slide and this set of data is that, well, there are quite a lot of different types of instruments out there, and it seems like it's a very vibrant market. At the same time, I'm curious though, how confident do you in the audience feel about choosing the suitable RF instruments that is most fitted to the use case that you would like to achieve? So if I think, yeah, I see the poll right now. I hope for you as well. So we're quite curious to hear from you. 0 is not confident at all. And 5 is you feel very confident in choosing the right RF instruments that is most fitted to your use case. I hope all of you had a chance to fit into the poll. Let's see if we can call out the results. Oh, that's quite interesting. We have quite a diverse group here. We have actually the majority that feels quite confident about using RF instruments. That's quite interesting. Very cool. All right. Fantastic. Thank you so much. And now that I know about like how you feel about the type of instruments that could be applied in impact-linked finance, we move on to the thematic areas. So we ask the respondents what thematic areas are the most relevant for them in their RF portfolio, and they can choose multiple answers. And as you can see, is an incredible, diverse, and flexible range of topics that the respondents have applied the impact-linked finance instrument on, and to drive impact across sectors. Across all of these diverse themes, I think the common underlying factor has been a focus on improved livelihood and systemic economic inclusion, and very much aligns with the most urgent global priorities, if you think about it. In addition, we also ask the respondents whether they apply gender and climate lens in their impact-linked finance portfolio. Over 70% of the respondents replied a positive answer to these two questions, which was really encouraging and also surprising at the same time that this is almost like a common practice that these lenses are being incorporated. What I wanted to highlight here is that while these lenses can actually be applied in different ways in an impact-linked finance structure, either as an integral part of the impact matrix of a transaction or as add-ons. For example, let's take gender lens as an example. We have also launched something called the 2x impact rewards, in which investees get a multiplier effect on the impact reward that they receive if they demonstrate commitment to gender agenda through the achievement of 2x certification. So what I'm trying to demonstrate here is that even though just with the topic of the type of lenses that you could apply to RF, there are different ways to incorporate it in the way how it is being structured. And the fact that as such, then RF is really flexible. And it is really apt to address intersectional challenges because its design is so malleable, like flexible, and also there are different ways where you could plug and play to adjust to your use case. And now we move on to the average ticket size of ILF transaction. When we look at the ticket sizes, it actually anchors the flexible nature of impact-linked finance because, as you can see, it spreads quite across a wide range of transaction sizes, starting from 100K to over $5 million. While the $1 to $5 million range is the most common, ILF can be applied quite effectively at both smaller and larger scales and is not limited to a specific ticket size or bracket. Ultimately, I think for us, our perspective is that ILF is about incentivizing impact, and the flexibility to be applied across ticket sizes, topics, and contexts is really what makes it very special, as we also saw from the previous data sets. So we have seen a lot of numbers, and I think we're slowly getting closer to the core of impact-linked finance, which is the impact rewards. And that will slowly lead us to the more technical aspects of it, which is closely embedded in the structuring process. With impact reward being so central to impact-linked finance, it's actually really interesting to look at the size of the reward in comparison to the total transaction size. In fact, half of the respondents, they shared on average, the impact reward accounts for 1 to 5% of the total investment amount. And next is like around 38% indicated that they contribute to more than 10% of the investment amount to impact rewards. So with this distribution, our takeaway is that the percentage of impact rewards as part of the transaction size at the moment is not drastically high. And to push forward and we look into the payer of the impact rewards, 60% of the respondents here, if you look at the first two answers combined, that sums up to 60%, they indicated that a separate funder covers the impact incentives or the rewards, either fully or partially. This is quite consistent with the fact that ILF was initially known and defined based on blended finance models and shared quite some similarities, with one being the dedicated outcome funders play quite a key role. However, at the same time, it's definitely quite interesting to see also 40% of the respondents actually cover the incentives in-house. This is definitely very interesting because it signals a shift towards building stronger alignment with impact objectives by embedding the incentives directly into financial mechanism, independent of external funders or not necessarily driven by external players. And so for us, that's definitely quite an interesting development that we could observe from the market. And beyond amount and who pays for it, it's really important to look at what the impact reward are usually being tied to. So as you can see here, over 70% of the respondents in a survey usually link the impact reward to a combination of outcomes, outputs, and activities. Only 24% of them link it to impact, outcomes, or proxies of outcomes. So our philosophy at Roots is that as much as possible, we would like to tie impact rewards to outcomes in an ILF. But here is, well, what we see in practice that is not always happening most of the time for also very real challenges. And which we can dive a little bit deeper in the next slide. To start with the challenges on top of the list here on the right is impact measurement and management, and also data availability. This definitely has been one of the key challenges across different levels of experience of implementers, and also certainly pose quite some challenges to linking the financial incentives to more outcome or impact level type of data. And secondly, the second challenge is more about the technical design when it comes to the structuring process. For example, how to set appropriate targets, how to align incentive levels to outcomes in a way that it is not overly concessional, and also managing the high transaction costs relative to the deal sizes of the deals. So this definitely is a concern, or it has been a hindering effect. And apart from the technical topics, how to operationalize IRF has also been cited quite commonly as challenges. For example, within organizations, to create buy-in is not always a smooth sail. And also how to set it up legally with contracts across different regions. And also the administrative work could also be a typical challenge when it comes to applying impact-linked finance. Nevertheless, I think we could also be quite happy to see what are the types of key opportunities that were identified by the practitioners as well. Quite repeatedly, impact-linked finance was cited as a tool to align stakeholders within or across organizations on shared impact objectives. And secondly, IRF also present very clear opportunity or as a tool to optimize resources and make every dollar work harder for impact, and also present a very strong potential to create impact additionality. And the last one here, which I noted as a common comment from the veterans. What I meant by veterans is practitioners that have over accumulated of 20 transactions in impact finance. And for this group of respondents, they've cited particularly that it could be interesting to see how the field standardized further with maybe standardized learning frameworks, how also standard for setting incentive structures that would allow more targeted incentive setup in priority impact areas, so then we can unlock more impact potential and opportunities down the line. Building on these opportunities that were identified by the practitioners in the previous slide, more than 70% of the respondents actually also indicated that they expect their engagement in impact-linked finance to increase over the next 12 months, which is great. And because for us, it means it demonstrates the confidence in impact-linked finance as a tool to drive meaningful impact, and also demonstrate the desire to continue advancing and refining its application, not just within Roots, but also across the board of practitioners in the field right now. It was also very encouraging to hear that many of you find Roots support being helpful in your journey of practicing impact-linked finance, especially for us, we see ourselves as a field builder. We're really excited to build on this momentum with you all, to strengthen and to scale the practice of impact-linked finance, regardless of if you have kickstart your journey or not. And with that, this actually is the last slide that I have from the survey results. But what we're curious to find out is, well, this is what we see from the data in the survey, but also how is the market picking this up, and how is the momentum being reflected in the last 6 months? And so we have also listed quite a few developments here, showing us actually quite a variety of organizations, including the advised fund managers and intermediaries, the kind of new initiatives that they have launched to integrate impact-linked finance into their operations in the last 6 months. And this confirmed also the previous slide, which is, well, there is an expectation that the engagement in impact-linked finance is going to increase. But also, is this particular list, and obviously there are more, it highlights also the adaptability across different types of organizations and contexts when it comes to RF, as well as use cases. And so for us, it's also quite interesting to see who is picking this up and how they're using impact-linked finance to advance their agenda. And we're very excited to see how the role of impact-linked finance is actually expanding beyond how we originally started off with, and that is becoming a more powerful tool to drive measurable impact. But apart from seeing the momentum, as I said at the very beginning, I think an interesting and important question for us is to think about, well, what does it mean for us to advance the practice of this field? And so I would like to introduce our latest addition to the impact-linked finance family, which is a new instrument that we introduced to the market last week. So it's really, really fresh. The reason why I would like to bring this up at the moment is because as we see that the momentum of impact-linked finance is picking up, but we also acknowledge is that indeed there are quite some challenges. And so at Roots here, we constantly ask ourselves, how can we make it more even easier for more people, more organizations to apply IRF? And so SAFI is actually inspired by the experience from our own investment round last year. And as I said, also to take into consideration some of the common challenges that were mentioned by the practitioners and also experienced by ourselves. We have launched SAFI, which we're super excited about. If you use the term from the conventional financial toolkit, it might be the closest to what we call the safe notes. But this instrument is very much consistent also with other IRF instruments, but even more flexible, not only for the entrepreneurs, but also for the funders. So let me walk you through what I mean by that. First of all, SAFI is non-dilutive. There's no exit required. And so there's no debate, negotiation when it comes to these terms associated with the exits. And secondly, SAFI is actually a revenue-based financing instrument. The entrepreneur is provided with upfront capital with repayment linked to impact achieved. What does that mean? Well, basically is in simple terms, the more impact, the lower the repayment. So it's actually a very simple structure. SAFI also can easily integrate different optional features. I'm speaking about point 5 here, that can be used to customize the instrument for specific use cases. But what I did not touch upon so far, which is the third and fourth, which is what we think that is truly special and make SAFI stand out even more as a revenue-based financing instrument, is that, well, you don't actually need to know the impact data ahead of time, but rather IMM reward and target can be agreed up to 12 months after signing. And that really makes it a real game changer because as we all heard earlier, impact measurement and management is a real challenge, and that has always be kind of like a bottleneck for a lot of the practitioners. And so we're really excited about the setup because on one hand, while it makes it easier to structure the instrument upfront, at the same time, it continuously to encourage the measuring and also managing of impact, encourage more accountability and less control. So what we're trying to incentivize is not only to encourage the impact enterprise to prove the claim, but really to take it back in their own hands and leverage the process and maybe even at some point get rewarded to set up an impact measurement and management system and with the verification at the end of the term. Some of you might ask if SAFI is a catalytic tool or a near market rate investment. Well, let me bring the good news. It can be both. And this is a matter of how you set the repayment cap. But if you are curious to learn more, actually, we are really prepared to help you to embrace this journey, as you can see here. If you're interested in getting involved, there are different levels of engagement that you could tap into if you click on this link here. Leo, I think you will be also helping to put this link in the chat so it's easier for everyone. So either to start with, there is the access to the tools and the templates. And if you are hungry for more, we're also offering an introductory training. And of course, there is also expert mentoring on the job if there is a request. Either way, I wouldn't want to dive too deep into the details of this. But as I said, here is the link. And if you're interested, please do click on that link and see, explore a little bit, and we'll be happy to hear from you. Okay, so okay, so the reason why I mentioned SAFI is because we asked the question of, well, how can we make the practice of impact-linked finance easier? And so we innovate and we bring a new instrument to life. But at the same time, is it really helping us to create the systemic level of impact that we would like to create? And so we did not let ourselves stop there. In fact, we see that impact-linked finance has been gaining traction and interest. And we think that there's still so much that we can do, especially with the lessons, the tools, the templates, and the process around IRF that we have refined and learned over the last 8 years. And we really want to see how impact-linked finance can scale so that, because this is how we understand how we generate impact. However, we are also a small team. There's only that much impact-linked finance that we can physically do ourselves. But if we could find a way to systematize everything that we've learned to date and make it available to others, including you here in the room, then we could really see major impact additionality. And for us, this is super exciting. And so, apart from the new instruments, this is what we've been doing with support from SDC. And also full disclosure, we're not quite there yet, but this is a sneak peek into what we have been building. Basically, it is a transaction hub that brings a host of our bespoke tools and templates that can be accessed in a modular manner. And our hope is that with this hub, we can walk you through the process of doing an impact-linked finance transaction systematically, including the tools and templates that we have refined over the years. And of course, if you need specific guidance or support as you build your own IRF practice, we're also available for that too. And please feel free also to subscribe to our newsletter if you are excited about and also curious to look to know more about the Transaction Hub as we are ready to launch. Please do subscribe to the newsletter. And Leo is also going to share a link in the chat. And yeah, with that, I'm very curious because I've spoken a lot and quite curious about your thoughts. But also to kick it off, we have one final poll just to gauge the room and see where you are at. So now that you have heard a lot about where the market is right now and also what is coming up, what's next for you in your impact-linked finance journey? We have three options. I'd like to get involved in SAFI specifically. I'm excited about the impact-linked finance transaction hub. And more generically, I want to learn more about IRF as a whole. So I'm quite curious to see where the sentiment in the room is. Let's see if I don't know how many people have answered yet, so let's see if we already have the results. Okay, I see quite competing results, but definitely there's much more interest in SAFI if you're forced to only choose one thing across these three different options. So thank you for sharing your interest and also excitement with us. And as I said, and also as Leo shared in the chat earlier, we have quite a bit of resources on the website and also on the YouTube channel about SAFI already. And yeah, we're curious to hear from you. And for now, also, as I said, I have spoken quite a bit, and I would be quite curious to see if there are any questions from your end. And with that, I would like to open up the floor for the Q&A session. And now I'm just quickly scrolling the chat to see if there are already other types of like previous questions that I could answer. Okay, I see quite a bit of technical question about SAFI earlier. That's quite interesting. And they have already been answered. But if you have any other questions, please feel free to unmute yourself because it's quite a small group today. So I guess we can also make it a little bit more interactive.
Maxime, if I can jump in quickly, I see that Cheng has asked a question around principles on whether there are any best practices for ILF standards, any particular principles.
That's a great question. Yes, definitely. So, in fact, there are 9 design principles as the term impact-linked finance was coined back in, was it 2018 or 2019 in the reports with the BCG, Boston Consulting Group. And there is a set of 9 design principles of impact-linked finance. And so that could be a good reference of what effective impact-linked finance could look to or aspire to during the design of the structuring. I'm not sure if that can be. And then I hope I answer your question, and happy to share a link to that design principles as well afterwards thing. Oh yeah, perfect. Thanks a lot, Natasha. And I see also a new question from Anders. Why and how should an impact investor choose an impact-linked finance structure over a traditional impact investment in an LMIC? Well, a simple answer. Okay, I see that Bjorn already responded. Yeah, a simple answer would be, well, if you want to have more impact with the same amount of money that you're putting in, impact-linked finance would be a better option. It anchors to the opportunity that was mentioned earlier, which is, well, impact-linked finance is actually a way to optimize performance and effectiveness of the same amount of resources that you can deploy. And Bjorn also responded to that. Impact investors sometimes provide preferential terms upfront. And yeah, by linking it to results, which is the difference of impact-linked finance, then yeah, you get more for your buck. And if there's no further question, actually, I've prepared 2 discussion questions. But of course, if any other thoughts came to your mind afterwards, please feel free to drop it in the chat. So there are 2 questions that I'm quite curious to hear from the crowd here today. So apart from outcome funding, what are some other blockages that is stopping your application of impact-linked finance? Oh, I see more questions from the crowd in the chat just now. Sorry, I probably have missed that earlier. As you share, calling it impact link, while much of the results are on output/activity and perhaps outcome level, while measuring impact and attributing that, do you think the name impact linked is a bit misleading? As I said earlier, the philosophy is that as much as possible, we would like to link the measurement to impact and outcome level. And also there are different ways that this can be handled in order to get closer to link it to that category of indicators with the financing. For example, one of the instruments that I mentioned earlier, which is the Impact Ready Matching Fund, is a way to support enterprises to capture more data that will allow us to link the financial incentives more directly to outcome level, if not impact level. But also happy for others to chime in if you have any other addition from my team. And then I also see another question from Cheng. How do you choose the best impact matrix in setting the impact targets? That's a very deep in the structuring conversation. Do the impact investors who invest in ILF, do they still earn returns when they have to fund impact rewards? Okay. And so for the first question, as I said, is going quite deep into the structuring process, and I would suggest that you to start with some of our online videos on our YouTube channel, and maybe eventually also engage deeper in one of our courses. So then you learn a little bit more about the expertise from the learnings and mistakes that we have made before. But maybe one thing that I could align is usually when we set the impact matrix, we emphasize that is always in alignment with the different stakeholders, especially that it has to be aligned with the also strategy of the investees itself. Otherwise, what we have seen is also that impact matrix, what we intend to do is to help them to align and to create focus rather than being distracting. And so that's one of the design principles that we have mentioned earlier, but also quite important in terms of how we are choosing impact matrix and also setting the impact target. But then when it comes to more details, I would suggest that you stay tuned with our Transaction Hub, and we have tools and also templates there, as well as calculators that allow you and support you in this process. The second question from Ting is, do the impact investors who invest in ILF, do they still earn returns when they have to fund impact rewards? I think it's a matter of also how the impact investors is being like what role they play in a particular impact-linked finance structure. For example, in some of our funds, we do work with impact investors, fund managers, to source the pipeline and also go through the due diligence and also have them kind of co-invest in the impact-linked finance transaction itself. In that case, the impact investors can earn return based on their usual expectation as they want, because they're not directly part of the contract of the impact-linked finance transaction. And eventually down the line, if they also decided that they would like to fund part of the impact rewards, that would add a different kind of design question, as in like to what extent do they want to be concessional when it comes to the impact reward setup. But so far, I think most of the impact investors' involvement in the impact-linked finance transaction, they earn the return based on their usual financial return expectation.
Maxime, if I can quickly add on that, Hi, everyone. I actually realized I didn't present myself at all. I'm the lead of the transaction management consulting team at Roots of Impact. So very quickly to add also, that's the beauty about impacting finance, right? It is completely flexible. SAFI is particularly flexible, but so are the other ILF instruments. So whether there are returns to be earned also depends a lot on the instrument being used. So if it is a debt instrument, for instance, there can be a return, and what that return is also fully up to the impact investor applying. So even an impact-linked loan, for instance, can have a decreasing interest rate, and what the range of that decrease is can be decided by the impact investor applying impact-linked finance. And so with the SAFI, where it is about the multiple, how much of the multiple decreases based on the impact being linked, depends again on the investor. And then there are, of course, other impact-linked finance instruments such as the SINC, the social impact incentives, that are grant-like instruments. And in that case, of course, it is there is no return to foresee. So just a quick clarification. Maxime, back to you.
Thanks a lot, Leonessa. Thanks for jumping in and to also provide such a comprehensive explanation. And to complete the picture on that question, I see a new question from Emmanuel on the results of the survey. Can we have more information on who is the outlier that is responsible for most of the transactions closed to date? I would not be able to disclose which organization it is, but at the same time, I can tell you that this is one of the organizations that have started the practice since before 2023, and also they tend to use impact-linked loan as an instrument. So I think that's the most I could share with you when it comes to the outlier. But definitely quite interesting case. If there are no further questions from you, I would be quite curious to hear from your end in terms of like the types of blockages that you see that is currently stopping your application of RF. But also what I'm also interested to hear is that, well, where do you see RF can be applied in your context to drive the changes or the impact that you would like to create? Because that, as we said, we're very excited to see the field scale, but we were also very curious to hear from your perspective and to help us understand the market a little bit better. And as I see that some of you have been quietly participating, and I would also like to share my contact here in case you have further questions that you're too shy to ask at the moment, or if you feel inspired, or if you have other afterthoughts after this webinar, please do feel free to reach out. And as I said at the beginning also of the webinar, if you're one of those emerging practitioners of impact-linked finance, we haven't been able to include you in this particular version of the survey, please do reach out. I would love to add you to our list and have your voice being included in the next iteration of this survey. Thank you very much. And thank you for taking your time to show up and join us for this conversation.